So if you clicked on this video, you're likely a break-even trader. All right, so you don't consistently make money, but you also don't consistently lose money. The first thing to understand is that this is a very good position to be in. If you are losing money consistently, that is far worse than if you're just sort of not making anything, but you're not really losing anything either. So the first thing to understand is that if you are a break-even trader, you're in a good position to start off with. This is going to be helpful for people who also just are straight up unprofitable. They don't really have any upwards motion in their equity curve. They just sort of lose slowly and slowly. This is still going to be helpful for you as well. So my goal for you for this video is to learn from me on what I'm doing to stop being a break-even trader and the steps that I'm taking to make myself get to this first payout, first of all, but also just always have a growing slowly equity curve. And I know that there's plenty of things that could be the result of why you're not a profitable trader, but I'm just going to cover the two main things that I focus on and that I think if you focus on, you'll definitely find more success with. So there's a couple of steps that you need to take in order to fix this. Okay, so in order to go from a little bit up, a little bit down, a little bit up, a little bit down, there's only a couple of things that you need to tweak in order to make this equity curve go up. All right, and the way that you're going to find out what those things are is journaling. And I know that's probably not what you wanted to hear. It's a pain in the ass. No one wants to be sitting there writing out, what all the things that they did wrong were and why they lost a trade, okay? But it doesn't have to be this complicated thing that everyone makes it seem. The most important thing to do is, as long as you just write in how much you lost and how much you won, and you've got that plotted out on a line graph, that's all you need. Now, yes, you need to have the complexities. You need to have why you lost this trade or why you won this trade. What parts of your strategy went wrong here, what parts of your strategy went right here. But at the end of the day, it's about looking at your equity curve and seeing what is the fundamental reason as to why this isn't going up. Probably the most useful tool to have is just a simple line graph. If you're trading on prop firms, a lot of prop firms already do have line graphs built into the system, but a lot of them aren't very good, and they're also going to tailor these line graphs in a way that makes you think you're doing better than you are. For me, on this 50k Apex account, I don't like Apex's line graphs. I think that they're just they're not nice to look at, and they also don't show you how much left you have to lose before you blow that account. All right, so they're making this graph difficult for you to understand. They're making it difficult for you to see whether you're actually progressing or whether you're not. So the way I do a line graph is I just looked up on Canva. Canva is a free website. I'll put it in the link in the description, but you just look up line graph template and you just plug in your profits and your losses after every trade, and it'll plot that out on a line graph for you. And the three most important things to have on this line graph is your current account balance, your maximum equity, so the highest that your account's been at for all time, and then the maximum drawdown limit. Okay, the maximum drawdown limit and your current balance are the two most important parts. So as you can see here from this 50k account, this is a live account. This doesn't include the trades that I took during the challenge. This is only on the live account that I can secure payouts with. But you can see that I went down a bit, I went up a bit, and now I'm just ranging here. All right, that is a perfect example of being break even. So if you don't have data and you can't see this pattern right in front of you directly on a line chart, then you need to find a way of seeing that. So go back through your data, figure out all your trades, plot them out on the line graph, and that's going to make you see, okay, is my account going up or is my account going down, or am I ranging at break even? So now that I am ranging at break even and I can see that, there's one thing that I can't let happen, and that is hit this red line. That's all it is. It's about managing your risk and making sure that you don't hit that maximum drawdown limit. So the second most important step to pair with this line graph is just having your maximum drawdown remaining right there in front of you. And you can look at this every single time before you start trading. So in this particular situation, I have $1,793 to lose before I blow this account. With this information, you can decide, okay, well, I've got $1,700 to lose. So I'll make it so that if I lose 10 trades in a row, I blow the account. For me, I risk a lot heavier than that because I don't want it to take me 5 months to make a payout on a 50k account, especially when they're so cheap. I risk a lot more. So in this particular situation, I would be risking about $400. So if I lose 4 trades in a row, I've blown the account. And the reason I'm able to do this is because of my data. Even just from this small example here, you can see I had 3 losses and all these other days were green, all right? So my win rate is high enough where I know that there's a very low probability I'm going to lose 10 trades in a row. If you're a high risk to reward trader but you have a low win rate, then you need to tailor your amount of loss very small in order so that you have to take a lot of losses before you hit this drawdown limit. But I don't want to get off topic. The main thing you need to see is just this line graph and look at it and think, okay, now that I can see that we're going down, up, why is that? Why is that actually the case? And this is where the amount of profit and loss each trade needs to be tracked and journaled. I know statistically, because I journaled this trade, I know that this particular trade right here, this one, was a trade that ended up running a lot more, and I cut my profits way too early. I cut my profits for about a 1-to-1 risk to reward ratio, and then on the next trade, I lost all of that and lost it all back again. Then on this trade, I did the same exact thing. I cut my profits a bit too early, and this trade also could have run a lot longer. Because I've journaled these trades, and these trades are right here, and I can see how much I won and how much I lost, I now know why my curve isn't going up. And that's because the first reason is I cut my winners too early because I'm afraid of losing that profit. And the second reason is because I have taken some trades on this account that I should not have taken. I don't want this to sound like it's some sort of complicated and really difficult thing, because if you're already at that stage as a break-even trader, you already have a system and you already must be familiar with the way that you trade if you're already at break-even. So I don't think I need to go too deeply into trying to explain ways on fixing your strategy. I think you can do your due diligence and figure that out for yourself, but the most important thing is just to be able to see this information before you start trading. All right, there is no reason to go into this day and risk $1,000 on a trade when I know that I only have $1,700 remaining. It makes zero sense. And I know that that sounds like, you know, Mr. Obvious. Everyone knows you shouldn't trade, risk that amount if you've only got that amount of drawdown. But have you actually looked, and do you actually know that that's the amount of drawdown you have? Like, if you don't see the amount of drawdown you have left before you start trading, if you don't actually know what that number is, you're gambling. It's as simple as that. This is the most important number out of everything. This is the most important thing to know, okay? You don't need to worry about how much you're going to make on this trade, or, you know, how much am I going to end up profiting off this. It's not about that. It's about how much am I going to lose on this trade if this trade goes wrong. Before you enter a trade, you need to have accepted the risk before you lose that trade, and you need to have, you should not be orientating yourself towards how much am I going to make. It needs to be how much am I going to lose here, and how much is too much to lose before I completely fuck myself over. So if we look over here on the right on the calendar, you can see that I took a win on the 14th, a loss on the 15th, then win, 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 loss, win, win, loss, win. To you looking at that right now, you'd probably think that, oh, well, that's good. You're winning most days. You should be up. No, because I wasn't winning enough. You can see on this day, I made $187 profit. I was risking 500. Then on this day, I made 200, yet I was risking 500. So then when it came to this day, I lost 400. Okay, so I risked a little bit less on this day, but you get the point. It's not about how much you win. It's about how much you lose. And it's about making sure that you're letting your trades run and that you have data on why these winning trades aren't making your equity curve go up. That's all it is. It's just knowing why. It's knowing why your win rate is higher, but you're still, not making profit, or why your risk to reward is higher and your win rate's lower, but you're still not making profit. This is the easiest thing to do. It takes no time. It takes 10 minutes. You just write out how much you won for the day, you plot it on the chart, or you write out how much you lost for the day, and then you can just see it all and you know exactly what happened that went wrong. Did you take your profits too early? Did you risk more than you should have? Did you move your stop loss and end up losing way more than you had intended? That's literally all it is. Every strategy works. Well, not every strategy, but basically every strategy works. If someone made a video about it, it probably works. It's just about having data tailored specifically to yourself, okay? It doesn't matter what someone that taught you the strategy's win rate is. It matters what your win rate is. All I really want you to get out of this video is that if you are a break-even trader, you're a lot closer than you think you are. You just need to try and figure out what the problems are. I know for me that my problems is I cut my winners too early and I take bad trades sometimes. So what can I do to fix it? Try with everything in me to not take trades when I know I shouldn't take them, and when I'm in profit to not start freaking out and cut that and try and make these profits a bit bigger. And that's all it is. You just need to have this equity curve drilled into your mind and this maximum loss drilled into your mind. That's it.